In today's episode, I'm going to teach you how I would go about replacing my 9 to 5 income so I could escape the rat race as quickly as possible. At the end of the day, this is really a numbers game. So as we think about how to replace the income, I want to begin by doing a cost analysis, or it's almost like a profit loss analysis. And the reason I want to do this is because I want to kind of get into the numbers of how much you're making and how much you're spending. And I'm going to use rough numbers or even numbers that are relatively easy for you to multiply up or down, divide down to match where you're at. So let's start with income. So your income statement here, this is the profit that you're making currently from your wages. So this would be presumably from like W-2 wages. And let's just say, to keep the numbers round, that you're making $5,000 per month after tax. So this is after taxes have come out. Now, at $5,000 per month, that's $60,000 per year. And in terms of spending, your expense side over here, or your loss, expense side over here, or the loss, let's just say you're spending roughly $4,000 a month. So basically, $48,000, almost all of this, not all of it, but a lot of it is going right back out the door in terms of cost of living. So one of the questions that I had to ask myself before I quit my 9 to 5 job was whether or not I'd be willing to earn less money, to take essentially a pay cut, if it meant living life on my own terms. The answer for me was a resounding yes. To reduce some of the things I was spending money on, maybe to travel less, to buy, less, fancy things, or go out to restaurants a little bit less. But if that meant that I didn't have to work 40 hours a week at a job that I didn't enjoy, for a boss that wasn't a very nice guy, that to me felt like it was worth it. I mean, that was the approach that I took when I was thinking about this. So for me, one of the things we really got to think about are what your expenses look like right now. So if you're currently at $4,000 a month, let's just say, for the sake of argument, if there was a way that you could reduce this by 10% or 20% down to, $3,200 a month, well, then all of a sudden, the amount of money that you need to be making per month in order to replace your wages and give up that 9 to 5 job, now you've set the bar lower. So something that I've learned is that sometimes traders who come into the market, and of course I'm a trader. By the way, for those of you guys tuning in perhaps for the first time, my name is Ross Cameron. I'm a full-time trader, and I funded my first account back in 2001. So I dabbled in the market a little bit between 2001, 2010, when we were going through sort of this turmoil from the dot-com bubble bursting and then what ended up becoming the Great Recession. And I didn't really get into the market until a little bit later as a full-time trader. But from my vantage point, I've seen a lot of people who have come into the market and they've said, well, in order for me to make trading work, it needs to replace my 9 to 5 income, right? Otherwise, I can't justify the time spent in the market. And if someone's coming into the market and they're in their 40s or in their 50s, their 9 to 5 income might easily be 6 figures. So now they're saying, I need to make $10,000 a month trading in order for this to replace my 9 to 5 grind. Now for me, when I started, I was still in my 20s. I was young enough that for me, if I could make just $200 a day, $4,000 or $5,000 a month, that was living large. And that was gross. That was what I needed before tax. So for me, I started at a point where my cost of living was lower. I didn't have kids. I didn't have a mortgage. I didn't have those other things that you have when you get a bit older. And so for me, the amount of money I needed in order for my endeavor, my hobby, which became trading, to become viable, well, the bar was set very low. In other words, it made it easier for me to justify that this was working and it was worth continuing to invest in. And so I think that for those of you guys who are younger, there is an inherent advantage when you're younger to being able to take the risk of trying to make a side hustle or a hobby an actual real source of income. Do it when you can get by on less. And for those of you guys who are a little bit older, well, recognize that there's going to have to be a transition period where you're continuing the 9 to 5 grind and you're supplementing it with this side hustle. Now, the side hustle doesn't have to be trading. That happens to be what it is for me, but it could be some other things, as we'll talk about. So the first thing that we've got to do is sort of figure out what your income is and what your expenses are. So right now we're just going to go with $5,000 a month of income and $4,000 a month of expenses. And so with these numbers, now we have to figure out how would we go about essentially retiring from that 9 to 5 grind, quitting. So there's a couple of different ways you could do it. So one is by using a calculation, which is to figure out how much money you would need to have saved in order to live just off the interest from that amount of money. Essentially, it would be invested in a combination of stocks and bonds where you could pull out interest from dividends and things like that. So the rule here and the formula is that you multiply your monthly expense times 300. So that means if you're spending $4,000 a month times 3, so 4 times 3 is 12. So it's going to be $1.2 million. Okay, so if you've got $1.2 million, then you don't have to work anymore because you can now draw $4,000 a month off of that account pretty much indefinitely. So that's the good news for those of you guys that have $1.2 million in the bank already saved. And for everyone else, we've got to figure out a different way to earn $4,000 a month. So retirement for many people will look like working at this $5,000 a month, job for 30 plus years and saving, as much as you can until you get to this magic number right here where you can retire. Now, of course, the cost of living increases, but your wages increase over time. So, this number will adjust with inflation, but this is the idea. And this is, of course, the traditional idea that so many people have followed for so many years, including my mom, who worked for 40 years in a hospital before she was unceremoniously, laid off and fired. And to me, that's what's really sad, is that there is no loyalty. And I think a lot of people learned this in 2007, 2008 with the housing crisis and the Great Recession of all these people that lost their jobs. And so for me, I graduated from college. I was working full time my last years as I was finishing my college degree. And when I graduated college, I graduated into the Great Recession. It was an abysmal job market, the worst one that we had had here in the United States in decades. And so I was coming to the market at a time where, there was no faith that if you got a job that you'd even be able, how long they would keep you there before they could lay you off if things got tough. So for me, I kind of always, from a very early age, had this feeling that you can't count on anyone other than yourself. And so being self-sufficient and financially independent was very important for me. And I think that's true of a lot of other people that graduate around that same time, just that kind of inherent trauma of coming into a job market where, you were told, get your college degree and then you'll be able to go out there and get a job. And wait a second, that's a lie. I wasn't able to do that. But sure as heck do have those student loans that you've got to pay off. So, at a pretty high interest rate. So it's like, it just felt totally wrong. And it's just the way it was. So, all right. So $1.2 million in the bank. Well, that's one approach. Now, what if we thought about this a little bit differently? So for the $1.2 million in the bank will produce $4,000 a month. Is there another way that we could produce $4,000 a month? That's kind of my question. So how about this? What if we thought about producing the $4,000 a month through your own work, but not a 9-to-5 job? What if we could find a way to harness something that you genuinely enjoy doing and turning that into a source of income? Because if we could do that, then then that's that whole thing of you don't work a day in your life because you enjoy what you're doing. You actually look forward to getting up and doing the side hustle. So let's just say, for the sake of argument, that your goal is to make about $1,000 per week. So about $1,000 a week. Now we're rounding up just a little bit over $4,000 a month, of course, but we'll just say $1,000 a week. So that would be Monday through Friday, about $200 per day. Okay, so $200 a day. Now I'm going to throw a couple little ideas out at you, and you can do with them as you wish. So one idea for these side hustle ideas that I've had friends that have done and have really been really interesting to watch them. I have a number of friends that have set up stores on Etsy.com. So Etsy.com is where you can sell handmade things. And I know a lot of people that sell on Etsy anything from jewelry, pottery, ceramics, cutting boards, vintage things that they pick up at flea markets and things like that. And it's so interesting to watch people that have created these little businesses. And this is something that I think is really incredible about this current this just today, this current day and age today, that almost anyone can create a small business. 15 years ago, 20 years ago, the barrier to entry to create or build your own antique store or your own jewelry store was a whole lot higher than it is today. So if you have something that you're passionate about, like I said, it could be model trains, it could be aviation, it could be fishing rods, tying flies for fishing, then all of a sudden there's a whole world of ways that you can monetize your particular skill set and interest. And that encourages you to reinvest in yourself, to build that skill set to be even bigger so you can monetize it more, so you can build it more. I mean, you've seen people that have created these incredible websites, certainly Etsy for handmade goods. You've got eBay, which is very similar. You could sell antiques and things like that. You've got people that are buying and selling clothes. I mean, just as an example, I'm wearing a shirt right now that I got. This is a shirt that I would have picked up. I can't remember if it was on Etsy or eBay. It's a vintage Grateful Dead shirt. And, you have people that are finding things like this and then they resell them. And it's essentially arbitrage because they buy them from somewhere that has a hard time connecting to sort of all the people out there. And then they put them on a marketplace. It's marketplace arbitrage where now it's worth more. You hear about people doing this where they'll buy something, on Amazon and resell it on Etsy or Amazon and resell it at, a different marketplace. I mean, you've got to be a little bit careful about this because you can get yourself, kind of down a rabbit hole with low quality stuff. But when you do it with something that you're really passionate about, that can become a business. No doubt, YouTube, YouTube and social media in general can be a great way to monetize something you're passionate about that fits right within this topic. So if it's jewelry, if it's, vintage t-shirts or, it's fly fishing or whatever the case is, to me, YouTube has always been the place to go when I'm like, how do I unclog the drain, of my dishwasher? How do I check a circuit breaker that's flipped? It's always been like, how do I do something? So if you have something you're really passionate about and you can answer a question of how I do this, there will be people that watch that video. How to day trade. There'll be people that watch that video. That's the type of content that I make. But you might have something like, how do I tie a fly fishing lure, right? And then you make a video on that and all of a sudden you've got an audience. And people can, this is the thing where I don't feel like you have to worry about AI taking your job because they can't mimic the genuine passion and personality and interest that you have in this thing. I don't know if you guys have seen that guy on social media who is a train spotter. He goes and he takes videos of him in front of these trains and he's so passionate. There's no way that's going to get stolen by AI or by anyone else because he's got so much personality. And so the reason that these are just a few ideas, just to throw a couple out there that involve a side hustle, with passion of something that you really enjoy. Now, there are ways, of course, to make that $200 a day where you're doing it on your own terms that might not be something that you love. Maybe driving Uber or delivering food. There, no doubt. And there's a sort of a line of, at what point is this a 9-to-5 job, essentially? Am I doing this as a means to an end where I'm going to drive Uber for a year to try to make enough money to maybe invest in this passion, this side hustle project that I want to get started? Or is this just something I'm going to be doing for 10, 15 years? And, the more people that are driving, the lower the wages get, the tighter the competition is. So it's like that margin for profitability will start to shrink. And you could argue that that's true with other side hustles of making jewelry and things like that. The more people that do it, the more that profitability window shrinks. But I think that the good news with those is that if it's genuinely a passion, that's going to drive you to continue to innovate and to continue to put time into it where it doesn't feel like work. Now, one of the things that brought me into the financial markets was, number one, I wouldn't have a boss looking over my shoulder. I wasn't working a 9-to-5 grind. I could make my own schedule, sort of. I mean, I am kind of set to the market schedule, so I can't work in the middle of the night. I mean, I could if I was trading crypto or Forex or futures, but if I'm trading the stock market, then I am tied to market hours. But the other thing that brought me into the market was that the barrier to entry was very low. And so I'll give you an example. After my father passed away, I got a little bit of money from him, and I had thought about using that money to try to buy a small house that had either 2 or 3 apartments. So I could live in one, I could rent out the others, and then that would pay off the mortgage. Because I didn't have enough money to buy a house without a mortgage, but I thought, this could be a way to do it. And when I went to the bank, I couldn't get approved because why? I didn't have the income at that point to support paying a mortgage. And even though I said, well, but I'll have the rental income, and they said, no, that doesn't count. So the barrier to entry, even in that very small instance to get into real estate, was that I couldn't do it. So then I'm forced to either continue living at home with, my family, my mom, or to rent until I've established this work history and W-2 income and the taxes and everything else to get a mortgage. Now, of course, this was just after the financial crisis, and so they were being really a lot tighter on who they would approve a mortgage for. So for me, the barrier to entry to get into the market, though, that was a lot lower. You could set up an account with a couple $1,000s. You could download this software on your computer. Most likely, I of course already had a computer, and many people already would. So it's not like I needed to get special equipment. So ultimately, my barrier to entry was a couple $1,000s to get my foot in the door. Now, you could ask this question of, well, with let's say a $2,000 account, would you really be able to make $4,000 per month from it? And the answer is that I could do that today, but most beginner traders probably would not be able to achieve that. That would be just too high of an expectation. It'd be too high of a bar to try to achieve. So the way I approached it was I had a goal of about $200 per day. $200 per day. And what I said to myself was that if I could buy a stock anywhere between $1 and $10, that all I needed to do was buy 1,000 shares of it. And if I could make 20 cents per share, I'd be up $200. So how much money did I need in my account? Well, $10,000 would be the most. $10,000 so I could buy 1,000 shares of a $10 stock. But of course, at the least, technically, only 1,000 to buy 1,000 shares of a $1 stock. And one of the things that I learned in my early years of trading, and you can see this is, this is my trading layout here. And today I'm up to over $24,000, which is also one of the incredible things that I learned in the market is that it, for me, was scalable. That even though I started with these smaller accounts, I realized that, well, geez, why don't I start just doing 10,000 shares? And then 20 cents is $2,000, right? And then what about 50,000 shares? And all of a sudden 20 cents is $10,000. And so I've realized that you actually can scale up relatively quickly if you've got the risk tolerance and you've got the capital. Now, in my experience, the capital was built up as my trading profits increased. So, certainly in the first 6 months, 12 months, 18 months, but eventually my account built to a point where I could start taking these bigger positions, even if it was a $500,000 position. And I was okay doing that if, in return, I could get, $10,000, $15,000 winner. So one of the things that I'll show you about my trading metrics, and this may be interesting to some of you who have thought about getting into trading, but may not be interesting to everyone, is that if we look at my metrics over long periods of time, and this right here is over $19.5 million in fully verified and independently audited trading profits. So this is real money. And what you'll notice here is that if we look at price and volume, and the majority of my profit is on stocks, this is up to $10 right here. So yes, I will trade at this point stocks between 10 and 20 and 20 to 40 and higher, but to a much lesser extent than I did when I first was trading with a smaller account. So what I've learned is that there really is a sweet spot in the market that not only do I focus on, but generally speaking, most retail traders focus on it as well. Why? Most retail traders have relatively small accounts, $5,000, $10,000 accounts. So they've got smaller accounts. So what are they focusing on? Lower price stocks where they can buy 2,000 or maybe 3,000 shares or whatever the case is. They buy as many shares as they can. And now you might say, geez, it's very risky to put $10,000 into a position with the potential, or not necessarily the potential, but only take $200 of profit. You're risking $10,000 to make $200. And I would say, no, not exactly. for instance, if you buy, let's just say you buy a lawnmower on Facebook Marketplace for $500 and you fix it up and then you sell it for 600, right? Okay, so were you risking 500 to make 100? Not really, because you knew you had something of value. The question was, am I going to sell it for 600 or for 550 or maybe for 700? But when you buy a position in stock, you own something now of value. So the question is, all right, I own this. How long am I going to hold it before I sell? And so obviously, if the price starts to decline, you might say, all right, I'm not going to hold it from here all the way down to here. I'm going to sell for a loss in this area. And of course, that gets into day trading strategy in more detail. But one of the things that I found for me was that the path to making that $200 a day, and this is, 15, 16 years ago when I was getting into the market, the path for me was not through Etsy, which I don't even know if was around then, eBay, or YouTube social media. The path for me was a lot clearer getting into the financial markets. So if you're not sure what your passion is or what hobby you could monetize with social media or with an online store of some type, then I think you've got nothing to lose by focusing on gaining financial literacy. I've got a ton of episodes here on YouTube where I talk about my day trading strategy, and I'll put links to some full-length trainings at the end of this episode. You can certainly continue to research and learn more about real estate. I think you'll find the barrier to entry is quite a lot higher, especially if you're younger and you don't have a well-established work history, because you're not going to be able to get a mortgage or a loan. And for those of you guys that do have that hobby or passion that you're already into, I would explore if there's a way that you could start monetizing that, because I think you'll find that if you can generate a little bit of profit from it, it's going to motivate you to double down on it, and it's not going to feel like work. And then that's where you kind of have that exciting moment where all of a sudden the income you're making from your side hobby, this side hustle, exceeds what you're making and is replacing the 9-to-5 grind. And I bet almost all of you would be willing to take a pay cut if it meant doing something that you really enjoyed every single day. And that's just the beginning, because if you really are passionate about it, if you really love what you do, then I think success follows that. So for those of you guys tuning in, I hope you enjoyed this episode. If you did, hit that thumbs up, subscribe to the channel, and why don't you check out some long form episodes here to learn more about my day trading strategy and to gain more financial literacy.